From rise in policy rates to continuous surge in tourist arrivals, we bring you the latest economic updates for the month of February 2023. Hi, I'm Zaeema Jihan and welcome back to the First Capital Economic Watch. The Monetary Board of the Central Bank of Sri Lanka, at its meeting held on 3rd March 2023, decided to raise the standing deposit facility rate and the standing lending facility rate of the central bank by 100 basis points to 15.5% and 16.5% respectively. Given the necessity of completing all of the prior actions in order to proceed with the finalization of the IMF Extended Fund Facility arrangement, the Monetary Board and the IMF staff agreed to raise policy interest rates by a smaller amount than was anticipated during the initial stage of negotiations. The board believes that this decision will pave the way for a faster than expected deceleration of inflation. Looking at the inflation for the month, as expected, inflation continued to display a declining trend for the fifth consecutive month to 50.6% year-on-year, while month-on-month inflation increased by 0.5%. Year-on-year inflation of food group has decreased to 54.4% in February 2023 from 60% in January 2023, while non-food group increased to 48.8% from 47.9% in January 2023. CCPI index declined with the decrease in expenditure value of food items by 0.74% and increase in non-food items by 1.2%. Analyzing the month-on-month inflation, in food items, vegetables, eggs, rice and red onions significantly contributed to the decrease. Meanwhile, non-food price increase was mainly noted in utilities, transport, clothing and footwear. The contribution from food category for year-on-year CCPI was 17.23%, while the contribution of non-food items stood at 33.36%. Analyzing the year-on-year inflation of CCPI, contribution of non-food items were mainly due to the increase in price of transport, utilities, and restaurants and hotels. Looking at the NCPI for January 2023, NCPI was recorded at 53.2% year-on-year compared to 59.2% in December 2022. Moving on to M2B and credit growth. Private sector credit further contracted by LKR 72.6 billion in December 2022 due to the higher lending rates, while state credit reflected a net borrowing of LKR 152.6 billion. On a year-on-year basis, state and private credit together recorded an increase of 6.38%, and on a month-on-month basis, it is a drop of 1%. Foreign reserves improved by USD 96 million to USD 2.2 billion in February 2023. Meanwhile, market liquidity displayed slight improvement after continuous injections to liquidity via term reverse repos by CBSL amidst significant volatility during February 2023. In terms of the currency, LKR remains steady at 362 level against the USD and slightly appreciated against most of the major currencies including Australian dollar, China renminbi and the UK pound. In terms of the government securities, there were LKR 996 billion worth of maturities during February 2023 and the new issues through auctions worth of LKR 457 billion, creating a deficit of LKR 540 billion. Buying interest slightly emerged on the market with a positive upturn in securing financing assurances from all major bilateral creditors including India and China. Accordingly, secondary market yields displayed a moderate decline during the month. Meanwhile, auction yields at the weekly T-bill auctions declined only marginally by 19 basis points in 3-month maturity, while both 6 months and 1 year declined by 5 basis points. Moving on to the finance sector rate movements, AWPR declined to 24.21% from 25.28% in February 2023. In terms of the external sector, earnings from exports dipped by 11.3% year-on-year in January 2023, continuing the moderation observed since September 2022, though at a slower pace than expected. Meanwhile, imports declined by 29.2% during January 2023 to LKR 1.4 billion. Exports for the month of January 2023 recorded a decrease of 11.3% to USD 978 million as all segments of exports contracted across the board during the month. In terms of imports, with the continuation of import restriction measures, import expenditure declined by 29.2% year-on-year to LKR 1.4 billion. Decline in import expenditure noted across all segments, while imports of investment goods, mainly machineries and equipment, fell by 48.6% year-on-year. Accordingly, balance of trade recorded a deficit of USD 410 million. Balance of payment for January 2023 recorded at USD 211 million compared to January 2022 amount of USD negative 1.4 billion. The total tourist arrivals for the month was recorded at 107,639, displaying an increase of 11.5% compared to February 2021, owing to the peak travel season, as well as the other factors such as improved socio-economic conditions and increased connectivity to the country. The top countries of origin for tourists in February were Russia, India, the United Kingdom, Germany, and France. Finally, moving on to the global market, a mixed sentiment persisted with some major indices seen recovering during the month, while other indices recorded losses. So with that, we conclude the monthly recap for February 2023 and stay tuned for more updates in the future. Thank you.